This is question 21.4 that I want us to look at in terms of IFRS 9. It's a very nice question in my opinion. I chose it because it tests the perspective of both the issuer as well as the purchaser. So it asks you for journal entries if you are the issuer and it's a financial liability, as well as if you are the purchaser and now in your books it's a financial asset. Something that this question contains is credit losses. You don't have to mind the credit losses. It's not in your syllabi. It's not covered. So you can just ignore the credit losses. If you look at the original memo that I uploaded for GARP, you will see that there's one journal entry that they have done for the 2,500 Rand credit losses, but that is not something you have to mind. And I'm going to ignore it for this explanation because it's never going to be in your test. Right, if we read together, it says, on 2 January 2004, Celine Limited issued 10,000 debentures. So now we see the word issued. So we know for Celine, this is a financial liability. They issued 10,000 debentures at a discount of 100 Rand off of their face value of 500 Rand. And details are as follows. The debentures are compulsory redeemable at a premium of 10% after 4 years. So the future value needs to be adjusted by a premium of 10%. The debentures bear an interest of 15% paid annually in arrears. So that means at the end of the year. Then the effective interest rate is given to you, and then the debentures are not held for trading and thus not designated through fair value profit or loss. So already from the information that you can see there, you should gather that this is an amortized cost calculation, right? We don't have like effective interest rates when we do fair value through profit or loss. Then they say Celine has a 31st December financial year end. Then they continue to talk about Grindr, and they said Grindr is an unrelated party which acquired 80% of the debentures which were issued by Celine. So now for Grindr, these debentures are a financial asset. And they say that this was done on 2 January at the discounted price. The transaction cost was 16,000 Rand, and this was incurred by Grindr. So now we have some fees that need to be covered. We know because it's a financial asset, we are working with a calculation regarding that the present value is increased. If it had been a financial liability, the present value is decreased with the transaction cost. But for Grindr, it's an asset, so we add the transaction cost. And then they say it is the intention of Grindr to collect cash flows. The debentures have been classified at amortization, at amortized cost. Then they continue to talk about the credit losses, which is not for your purpose. So I'm just going to jump to the required part. In the required part, they say, firstly, you need to prepare the journals as it relates to Celine for their financial instrument over 4 years. And then you need to do the financial or the journal entries as it relates to the statements of Grindr for the year ended only 31st December 2004. So this required part is very important to read it properly because for 4 years are required for A, but only for the year ended December 2004 will be required for B or recorded for B. So I'm not going to spend a lot of time in required B also doing calculations for Grindr for 2005, 2006. That's just going to waste my time, and that's bad exam technique. But in A, I have to spend my time doing all 4 years of calculations because it is required by A. I've opened a spreadsheet and I want us to start by looking at firstly the calculations as it relates to Celine and the journals as well, and then for B, the Grindr and what those journals and calculations look like. So starting with Celine, we need to find the future value, and the future value is at a premium of 10% because they say it needs to be redeemed at a premium of 10%. So I'm going to start by saying that there are 10,000 debentures that they issue. So this is a financial liability. And the face value is 500 Rand, but there's a premium of 10%, so I times by 1.1. Then for the present value, I just want to see if we have enough information to calculate it. We do. They say that they purchased 10,000 debentures at a discount. So I just want to go back to the question. We do have information for the present value. 10,000 debentures, they purchased it at a discount of 100 Rand off of the face value. So for the present value, they've paid 400 Rand for a debenture. So here I'm just going to argue then that the present value is the total 10, or they issued it, not they paid, they received money, but it was 10,000 times 400 Rand. Right, then we have to go and look at the timing, which is given to us. It's 4 years and it's not biannual or semi-annually or quarterly or something like that. So it's just straightforward. Then the payment will be based on the future value, aka the face value, but it should not take into account the discount or the premium. So here we're going to say there's 10,000 debentures. The face value or the future value is 500. And we are going to times it by the actual interest attached to the debenture, which is 15%. Then we can calculate the I, and now in this question we can go and cross-check if this 25% is actually the right answer. They've given all the information, but had it been a question that I had provided to you, that effective interest rate would probably be missing. Let's see if we get to the right answer. If I type into my calculator a future value of 5.5 million, a negative present value of 4 million, timing of 4 years at 750,000 Rand payment a pop, and I say compute the I do get an interest rate of 25%. I get 25.2326 blah blah blah. So I'm just cross-checking it. Under exam circumstances, I cannot give you 2,25.23262 blah blah. There will be clear rounding instructions to say you need to use 2 decimal figures. All right. Then continuing on, we now need to go and calculate our interest. So I've already just typed a summary of the interest and the dates and the amort. So amort 1 will be ending 31st December 2004, because you will see the issuance is 2 January, but in accounting we don't account for 1 day, so that will still be a full year. Then the second amort will be December 2005, third will be 2006, and fourth will be December 2007. Right, if I go to my amort function on my calculator and I say amort 1 to 1, I get an interest there of 1,00930 and 4,87 if I round to 2 decimal places. So it's 1,009,304 Rand and 87 cents. Then if I look at my amort 2 to 2 on my financial calculator, and I'm just typing as I'm explaining, so it's 1,074,734,29. 1,074,734 and 29 cents. For the third period, which ends December 2006, I'm going to say amort 3 to amort 3, and that interest is 115,6673 and to 2 decimal places 26 cents. 1,156,673 Rand and 26 cents. Thank goodness no politicians need to announce that figure. Then for the fourth amort, I get to interest of 1,259,287.59. And I've typed it in the wrong cell, so let's just paste it. There we go. 1,259,287 Rand and 59 cents. That would be our interest for the fourth period, which ends December 2007. Right, we need to do the journal entries for Celine as it relates to this entire period. So I'm going to start off with the issuance date, which was 2 January 2004. And on that date, we need to go and recognize that this is now a financial liability to Celine. So for Celine, we need to obviously credit financial liability and debit the bank account. Liability, if I can ever spell correctly, this would be debentures. Right, and we need to go and seek our present value. So it's going to be equal to 4 million. Right, the first date to be accounted for will then be the 31st of December 2004. And there I'm going to have an entry where I need to make interest payments to someone else. So the first thing I'm going to recognize is an interest expense. Of course, there is going to be an amount that flows, cash flow that flows out of the bank account, and then we know this will not balance, so we need to have our financial liability account handy. So for the interest expense, this is quite straightforward because the financial years of the issuance and the financial year of the company coincide. So it's simply going to be that expense that we've calculated here. The bank payment will be a credit, and this is going to be equal to the payment that we've calculated and put into our financial calculators. And we're going to need a balancing figure, which is a credit, and that is the difference between the interest and the payment. Right, the next entry will be 31st December 2005. And I'm just going to copy these accounts because it's always the same. The amounts differ according to the year, but that is all. So for the interest expense, it's going to be the second amount. For the bank, it's still the payment, so that is the 750. And we still need a balancing figure, and that's going to be the difference between the expense and the cash flow. Right, then there's an entry 31st December 2006. Here the expense is going to be equal to the third amount. The payment still 750,000 as per our financial calculator inputs. And again, a balancing figure is required. So there we go. Balancing figure for financial liabilities is 406,673 and 26 cents. For 2007, still the same account. At this point, you should be pretty bored. I think you are getting the hang of it. Interest expense is the last amount. Payment into the bank account, out of the bank account, into the bank account of the holder, 750. Balancing figure required. 509,287 rand and 59 cents to the second decimal figure for the last amount period. Right, so this would be the entries that are required for the Celine part of the question, or the Celine perspective, I'd say. But then for Grindr, it's going to be a different perspective. So let's explore that. I've now closed my question, so let me just open it again. For Grindr, they have purchased 80% of the debentures of Celine. So for them, we'll have to do a new calculation because their present value will also be affected by the 16,000 Rand of transaction cost. So let's see what happens with that one. For the future value of the Grindr company, we're going to say, all right, firstly, how many of the debentures did they buy? So I'm just going to first ask how many to buy. And they buy 80%. So there was a 10,000 issuance at 80%. And that should be 8,000, if I'm not mistaken. 8,000 debentures that Grindr has purchased from Celine. So the future value will now be based on the 8,000 debentures and not all the debentures that were issued, because it will only be the debentures held by Grindr. So it's going to be the 8,000. We're going to times it by the face value of 500, of the future value, and then there's a premium, so it's 1.1. For the present value, they purchased it at a discount of 100 Rand, I believe. So it was the 8,000 of the debentures purchased times the 400, which was the discount, 500 minus 100. And then we have to remember to add the transaction cost. It's added because it's an asset. Had it been a liability, it would be minus. So we're adding there a 16,000. Right, please remember to type the present value negatively into your financial calculator. Then the period is 4 years. What is the payment? Well, now the payment will be based on the new number of debentures. So that's 8,000 times the 500 Rand face value. And what is the real interest rate attached? I believe it's 15%. Now the I we can go and calculate. So I'm typing it into my calculator. 4.4 million as a future value, then negative 231,600, my present value, at a period of 4 years at a payment of 600,000 Rand a pop. Compute the I, and I get an interest rate of 25,03863 blah blah. Again, there's no proper rounding instructions, so the rounding instructions need to be given more properly in an exam situation. I'm not going to waste a lot of time with my amortization table because I don't have to calculate every single amortization period, only the first, because the required part clearly says the calculation needs to be done only for the year ended 31st December 2004. So in this instance, I'm just going to look at the first amort. And if I look at amort 1, I get an interest of 805,242,39. Right, I'm going to stop with my calculations there. Anything beyond this will be wasting some time for me. I have to continue with the journals, and the first journal entry will be the 2nd of January when this Grindr purchased the debentures. So on the 2nd of January 2000 and is it 4? Yes, let me just double check. To January 2004, we're going to start off by saying, need a proper debit and credit. Let me just indicate that. Otherwise, if I share this answer, everybody might be confused. Okie dokie. So on the 2nd of January, there is a purchase. So we're going to say we debit the financial asset. Debentures. We are going to credit the bank account. With the present value that we put into our calculator. Then there's a year end. So now it's going to be the other way around. We're getting interest income on the 31st of December 2004. So here we need to go and say, well, money will flow into my bank account. I'm definitely going to have interest income that occurs. And I am going to need a balancing figure, which is going to be the financial asset account. Right, so for the bank, it's going to be equal to the payment amount that I have typed into my calculator. For the interest income, I just calculated that amount, and that would be my first amount. And I'm going to short a balancing figure, and that is the difference between the payment and your amortization answer. Balancing figure 205,242 and 32 cents. Right, and there we have also now answered we've done the calculation as it relates to a grinder as well. Right, I hope you've enjoyed this video, and please also watch my explanation on 21.6. It's also an interesting question where there is a sale of a financial asset. All right, I will see you in the next explanation. Bye.